So in terms of what we would recommend is that you should assess whether or not the transitional safe harbor provisions apply. And why would you do that? If the transitional safe harbor rules apply to a particular jurisdiction, let's say Australia, the top-up tax is deemed to be nil, and we believe that you do not need to then perform the complex Globe Pillar 2 calculations, the calculation of globe income, adjusted covered taxes, which are complex calculations. You still need to lodge those three forms. You still need to provide general information, including your corporate group structure, but at least the complex calculations are deferred for potentially 3 fiscal years, which gives you additional time to consider the sources of data, automation, and software consideration. But nevertheless, I would recommend that you do not delay implementation any longer. For Australian headquartered groups, definitely perform those calculations now. That will inform you as to the level of compliance requirements at jurisdictional level. For foreign subs of HQ groups, you should initiate discussions with your group tax as to what information will they require from you and when. So would they do the calculation, or would they give you a template for you to do the calculation, or do you need to do the calculation using your own software and provide the information to them? So it's best to understand that, be clear, get clarity in relation to that. But definitely, I would say proactive calculation, proactive safe harbor calculations may inform that discussion, or may make it quicker. So as to what Xiaoming is looking at, we are looking at extracting inputs from our CTS full compliance software. So for those here who are using the software, and linking that into our CTS Pillar 2 software. Our initial case studies indicates that there are data inputs that can be automated to streamline the calculations, and GL changes could enhance that automation. There are sources of information that might be outside your GL systems. But also, on the other hand, there are inputs that cannot be automated. You cannot automate everything. For example, the reversal of deferred tax liability that's not reversed in 5 years, that will require manual tracking and manual intervention in the calculation if it applies. We will be holding an updated Pillar 2 webinar and workshops, so keep an eye out for that.